Hey, Joe. Vacation's over. We've been back for 2 weeks now. Don't you think the YouTube fam deserves a video? Come on.
Yeah, I'm working on it right now.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trade and get paid, trade and get paid, trade and get paid, trade and get paid, trade and get paid.
What's going on, everybody? It's Joe Giunta with Trend Trading Academy. I'm here to help you trade and get paid. And as you can see, I'm hard at work for you guys. Nah, actually, guys, I'm just goofing off a little bit. We went on vacation. I had some videos, all set up for you. And then we extended the vacation a little bit. And then, actually, we got sick. It's just been a crazy time getting back. But I'm back, ready to drop some content. And today's video is going to be crazy. I'm showing you on today's video the golden zone, the power of trading the golden zone from all the different time frames. Understanding how to use a golden zone to catch precise breakouts and make major pips. You've been asking for it. I'm dropping it. Don't forget to like, comment, and subscribe because these videos are bringing major value and I want to see a lot of people be able to see them and get them in their feed. If you want to become a student, go to trendtrading.academy. And if you want to get you some trading get paid merch, the hats, the shirts, get a trading journal, go to tradeandgetpaid.com and go ahead and get you that stuff. Trade in style, trade with precision. For now, let's get to the charts. If I go from low to high, now that's the overall, that's the big picture. Look where we're at. Look where we're at. Guys, if you see the big picture, right? You see the big picture. So this is the 4-hour chart. This is the daily and weekly movement. We see the big picture here. And right now, the 4-hour is sitting dead in the center of our golden zone. Why then is it such an important place? When we looked at the 30-minute, remember I told you, like this is the month cycle. Why? Because guess what happened? We had an extension and a pullback. And as the cycle closes, we're seeing it come right to our golden zone. That is now you have price correlation and you have time correlation. All right. So when you have price correlation and you have time correlation and price and time correlation are in agreement with each other, now you have a powerful zone. So now we can narrow this down even better. So watch this. I gave you this line and I gave you this line because of the previous pullback and because of where we are at the 21st of last month. So now we have a golden zone. So here's what we can do. It's actually pretty cool. We drop this down to the golden zone. We drop this down to the golden zone. What does that do? That avoids fake out. Remember I said, oh man, it might come up and fake out or it might come down here and fake out. Well, here's how you avoid the fake out. Now that we know we're in the middle of a golden zone, I put my bottom or my top on the top of the golden zone because we know what's going to happen, right? We're going to end up, let me get my annotation. We're going to end up with some gathering inside of our golden zone. And when it breaks out of the golden zone this way or this way, we're going to have significant movement. Why? Because if it breaks out of the golden zone in the bearish direction, now we're talking about reversal status. If it breaks out in the bullish direction, then what do we have? We have structure, right? We have structure. It's actually just that simple. So now we're just going to wait for the gathering. We're just going to wait for the market to decide what it wants to do because I don't work at the banks. I'm not a market maker. I'm not God. So I don't know what it's going to do. Here's what I do know. In this golden zone, as proved over and over again, this is going to be a place of gathering. So I'm going to let the market gather. And once it does, I'm going to let the market push. So it can be drop, base, rally, or it can be drop, base, drop. Either way, I'm okay with it because my pride isn't on the line. My money is. My percentages are. So what I'm going to do is I'm going to let price do what it wants to do. I got my golden zone. When it breaks out, I take it. Boom. Done. Very, very simple. So now, the next thing we're going to do, let me get rid of this annotation. How do I make my zone? Remember that line I said before up here? Well, guess what? We know that that line was significant, but we wanted to tighten it up. So now I know down here is significant, but where do we have that liquidity gather? Well, it's actually just simple. Look back here. And if you look back and look where you can see tops and bottoms meeting in the same place. All right. Right in there. You got tops, you got bottoms, you got, right? You got bottoms, you got wicks, you got bottoms. That right there is a great line for our other side. So now watch what happens. I get rid of my fib here. Now I got a beautiful trade set up. Now this is the 4-hour chart. This is the 4-hour. This ain't even the 30-minute chart. This is the 4-hour. So now all I got to do is say, well, I know that when price breaks out of one of these zones, I'm going to have significant movement. Okay. So guess what? If we know that patterns and how they react, well, we got movement, right? This comes from where? Right? Comes from a bull market. Boom. Boom. What if it breaks out? Right? That would be nice. You know, this little bit of that's nothing. That's just a gathering. No big deal. Right? What if it doesn't do that? What if it comes down here and does this, right? Comes down in here. Well, now suddenly you end up forming something, you know, the next thing. So it could be down here. It could come down and retest and push back through. It could come down and retest and push down. Now you have a whole new structure formed. Now we're no longer in a bullish trend, but now we're in a bearish trend. So all we have to do is take our bias out of the way, let the fibs do the talking, and let the market do what it wants to do. So now, take my annotation off. Let's drop this down to the 30-minute. All right. Let's take a look at that. Now on the 30-minute chart, look what we've done. From the 4-hour chart, we have price trapped within a 68 pip range. Man, that's small. That's nothing. 68 pips happens one night. GBP gives us 60 pips every night, basically. All right. So that's nothing. So now I want to tighten this up because why? On the 30-minute chart, on a 4-hour trade, I'm cool. If I'm taking a swing trade or if I'm taking a swing entry, I'm okay with this, right? I'm okay with that because, you know, no big deal. If it pushes through, you know, hey, let me get those lines off. If it pushes through and it kind of plays around in here, okay, I'm okay with it because I'm just waiting for this, right, on my swing entry. No big deal. And I'm okay with a wide zone because I have high structure. So that's a lot of pips. I'm cool with it. You know, if I'm gonna catch the entry here and I'm gonna go all the way up like this to this line, that's 130 pips. Let's get it, right? No big deal. But if I am on a 30-minute chart where I'm looking to take 15 or 20 pips, I don't want a 12 pip zone. I don't want a 11 or 12 pip zone at that point because that eats into it. It messes with my spreads. It messes with my profits, you know, and it's too much. It's too much waiting, and that's where you get messed up. So I want to tighten that if I'm going to trade off of the 30-minute chart. So how do I do that? Well, first things first. Let's go. Oh, let me get rid of my annotation. My bad. It's actually super simple. We zoom out. So if we know that the more recent, I gave you the information from the 4-hour chart and from the daily move. That's a big move. I want to know what's happening a little bit more recently. Okay. So what I'm going to do is I'm going to take my fib. Oh, I messed up. Sorry. Yep. I'm going to take my fib here and I'm going to drop it from here to where price is currently. And I'm going to see up here, this would be the target, right? Let me put an arrow there. If we get the breakout from the upside, that would be the target. All right. So we know that that's what we'd be looking for if we get out a bullish or a bullish breakout. So what I'm going to do, I'm going to put my line here and I'm going to get rid of that. Because what's more important is this. If I take that same fib and instead of dropping it to here, where price currently is, why is that troublesome? Can anybody tell me? Why is that troublesome right there if I drop my fib to that? It's actually a really easy answer. There you go. Thank you, Ashley. Right? It still can drop. I don't know if this is the end of the move yet. Everybody's got it, right? So what can I do? I could come right back to where it started. If price reverses, right? So let me drop a line there for you. If price reverses, right? Let's say price comes and drops all the way down. That would be a potential place for that golden zone. You see that? And look exactly where all this stuff started happening. Now, I don't know if it's going to go down to 100, but I do know this. Can I find the confirmation that this area that I just gave you was significant? Well, do you think that's significant? Think that's a significant area? Looks pretty significant to me. Looks pretty significant to me. Think that's a significant area? Looks pretty significant to me. Right? So what am I doing? I'm trying to get to a place where I can get ahead of the market instead of chasing the market. So what I'm going to do, I'm not going to try to get all the way up to here because I don't know if that's going to happen. So I'm going to move this down to here, to the bottom. If it does come to that significant zone, I'm going to come down to the bottom. And now suddenly, watch this. If I get a breakout from this line to here, I cut that down to 63 pips instead of 130. You understand what I'm saying? So now I have a very reasonable target for the 30-minute chart. A 63 pip move is a very reasonable target for the 30-minute chart. So now I understand I can do that because that's the potential area with confirmation of structure that I can get to. Now, how do I tighten this up? It's simple as looking left. So all I'm going to do is I'm going to look left, okay? I'm going to use the areas that the fib gave me right here. Let me turn these fib areas yellow for you so you can clarify here. All right. So we got that profit target here. That would be yellow. All right. Here was the buy. Here was the sell. And here's that bottom line. That's a starting line. So let me make that one. Oops. Sorry, my computer glitched here for a second. Let me make this one red because we know that if it hits there, that's a complete reversal. All right. So now what do I do next? Well, I'm going to look and I'm going to see where are the significant areas for the smaller moves that happened. And I'm going to see, do they match up with the larger areas? So I'm looking, how do I do multiple time frame analysis? Can I see that a 15-minute zone, a 30-minute zone, and a 4-hour zone all line up together? because that's how you'll understand what the difference is between a support area, a resistance area, or a supply area or a demand area. That's how you can tell the difference, because a 15-minute support doesn't necessarily mean that it's a supply zone. You know, a 15-minute resistance doesn't mean nothing. But when I can see that tested on all three or even further up, and I start to see that that's a consistent area, that when it hits on the daily or the 4-hour, that suddenly, you know, you're seeing gathering happen in those areas. Now I'm finding supply and demand zones. All right, guys, there you have it. I hope this video brought you major value. Bro, seeing how you can just drop that golden zone on the fib once you see it in there like that and catching the breakout, and you really don't have to have bias. You don't really have to understand or know which way the market's going to go, because even the experts that tell you they think they, you know which way it's going to go, a lot of times they might be wrong. So how do we boost that win percentage up in our trading strategy? This is how. We remove the bias from the market, and we just let the market do what the market wants to do, and we just ride the wave, because we're surfers. We're not God. We don't cause the waves. We just ride them. We get on the surfboard and we ride the waves that this market gives us. So I hope that brought you a lot of value. Don't forget to like, comment, subscribe, become a student at trendtrading.academy, and get your merch at tradinggetpaid.com. For now, I'm gonna see you in the next video.